Hello everyone and welcome to a new ATFX video. My name is Gonzalo Canete and here I am one more time to explain to you why we're considering crucial, fundamental, analyze the PCE inflation that is almost coming this week and is also one of the main indicators that the Federal Reserve is following to decide the monetary policies. That's why I want to share with you a few views on data to analyze exactly what happens over the last year and why we believe the inflation is under control by the government of the United States using the energy market. I'm going to explain to you everything in detail. Let me start the screen and let's go to the main points. First of all, let's analyze the inflation. During this video, I'm going to give to you the data related with inflation, but I also going to give to you charts and analyze markets like gold, euro dollar, dollar index and SP 500 to understand what is the impact on the market. If you take a look, you can analyze, or you can see actually on the numbers that the main inflation recorded for the last year, we can see that the month of August has been dropping strongly. The red line represents the energy. So basically we are watching the underlying components of the inflation on the CPI inflation. And the black line represents the all items, but we also can see the red line and the yellow line has a food and energy respectively. And as you can see, energy was the main cause of the core inflation, of the strong inflation, spike in inflation caused during the 2022. And we see that that energy cost is dropping. Actually, during the last period, August, the last data we got from the United States, inflation has been dropping strongly in energy mainly. Even when the food was rising, you could see the 4% decrease on inflation on CPI in energy and 2.1% up on food. So far, if the energy is dropping, it seems that the inflation is not a problem as far as the energy is not the problem, right? I want to also put special attention on the core inflation because if we consider the CPI, it's better to analyze core inflation because core inflation at least is discounting energy and food, and therefore is reducing volatility on the data. So we can see actually a more soft evolution of the numbers, which surprisingly is saying us that the core inflation is actually 3.2% United States, and following the economical manuals, that number should be below 2% because we consider that a health economy is never get an inflation above 2%. Therefore, 3.2% is still high, is what we call stick inflation. This is from August, 3.2% core inflation is dropping, but it's getting so slow now. And therefore, the main question, the $1 million question is how the Federal Reserve is going to continue cutting their interest rates without causing a problem with this. The answer, by tricking the energy market. As you can see, the PCE inflation is also here, 2.5%. It seems to be getting flat also. If you analyze the evolution, is absolutely flat here, where it was a clear downtrend since 2022, since the top records. Now it seems to be flat for the last at least 6 months, which is, in my opinion, significant in terms of understand what's going to happen next. Now, if we also go to the components of the inflation, this is just the evolution by BlackRock of the assets. If we analyze the components of the inflation, you will see that energy was dropping 4%, transport was dropping 1.2%. And again, this is based on CPI, which is the general inflation accumulating on the pockets of United States citizens. And therefore, the main component that is dropping the general inflation is the energy. And if we analyze, that's why when we remove the factors from core inflation, which is not considering the energy, the inflation is still high. So if we do not consider oil, inflation is still high. You can see here on the chart, the annual rate is estimated on the PCA by 2.5%. The core inflation is 3.2%. And again, you can see the energy is dropping 4%, but also inside of the energy, not everything is dropping at the same measure. We can see gasoline is dropping 10.3%. We can see fuel oil is dropping 12.1%. And energy, electric energy, is actually rising by 0.2, 0 point something, not really significant. So we can see that overall, this is the main cause of the inflation reduction, which is here, which is the head-shoulder chart that I want to share with you, and it's the oil market. And we have explained our previous reports two mainly factors. Supply size, we can see that countries like Canada, which are not members of the cartel of oil, OPEC+, those countries are increasing the exportation of oil, especially to Asia. We also have seen how United States has been selling the reserves of oil just to keep the oil prices low, because if the oil price is low, inflation cannot rise. If inflation is not rising, they can keep cutting the interest rate that Wall Street is asking for. So therefore, we can expect that the interest rates cut will continue dropping as far as the oil price is below certain levels. And the chart seems to be so clear. If this is a shoulder head shoulder pattern and is pulling back to the area of $80, $75, $80, we could expect a massive drop, that $30, $25 per barrel in Brent oil, which mainly will cause that. The second reason it was the demand. We talk about the supply, but the demand. The International Agency of Energy was also reporting that, in their opinion, they believe the main consumer of oil is the last 10 years. 60% of the oil is by China, and that's why they believe that probably is China the one who is dropping the consumption and demands of oil. Now let's go to the charts and let's take a look exactly the effects on the dollar, the effects on gold, the effects on SP 500, and the effect of these movements in euro dollar to try to predict more or less what's going to happen next. Now let's take a look on the charts. Let's take a look exactly what is happening, how the market is reacting to this move of 50 basic points, and also to the coming PCE inflation. We can see that overall, this is the long-term euro-dollar chart, which means that in theory, since 2008, the trend has been 1, 2, 3, 4, 5 double times on this occasion, and this will be the sixth time that is actually moving in a top of this downtrend. And in that case, it means that euro-dollar could drop in the coming months to even below the parity, and even to the minimum levels recorded since dollar is circulating as a real currency, which is very significant and very important. Now, moving to the close movements of the market the recent days, we can see that the euro-dollar has been rising and then dropping back again, because it's mainly the volatility caused by the decisions on Federal Reserve size, 50 basic points cut, which was giving oxygen to euro-dollar up by reducing the value of and expectations of the euro-dollar. But it's also true that the Central Bank of Euro has been mentioned certain comments during this week about that, in their opinion, they will continue cutting the interest rates until they reach a target between 2 to 3% on interest rates reference. So they probably, from now on to the next year, they're going to move the interest rates to 2% or 3% in that area, which is mainly causing a drop in the euro value. And if you take a look on dollar index, you can see that it's resisting really well the movements about 100%. One point I want to mention on the index is this volatility was caused in the day on Wednesday last week, when they cut the interest rate 50 basic points. But the interesting thing is, one day later, the value of the dollar was exactly when it was one day before. In other words, euro-dollar is not dropping anymore, regardless 50 basic points cut, which is a strong cut. It's a good shot. And still, dollar is resisting about 100.50 points, which is, in my opinion, relevant, because it's also showing us that maybe the expectation is this trade war that is coming, which means that they're going to keep fighting in a cut interest rate race from Central Bank of Europe, from Bank of England, and from Federal Reserve. And also now is joined this race Popular Bank of China in China, because it's also cutting the interest rates only after the Federal Reserve cut the 50 basic points, because it's giving them enough room to move now the exchange rate by cutting interest on yuan. Very interesting. The only top 5 economy that is not cutting the interest rates is Bank of Japan, which, by the way, doesn't need to increase the interest rate because Federal Reserve is cutting the interest rate. Now, going to the gold, going to the SP 500. Let's move first to SP 500. As you can see here, is getting ready to jump. The barrier of 5,800 points seems to be the last barrier that is getting ready to break out, because as you can see, the candles indicate here that more and more orders are getting accumulating in this area. More and more entries. The price is not dropping. Any single step back is taking new positions, getting ready to break out 5,800 points on SP 500, which is a new top record, a new maximum after these two runs, two completely symmetric runs we have done. And even if we want to speculate with this move, we can even say what will happen if this coming, right? It's giving us a target in 5,000, almost 900 points for SP500. Very interesting. Very, very interesting. And now, finally, in gold, we have seen also a new top record. We also have seen how it has been breaking up every single range that we have been drawing here. And therefore, again, projections with certain symmetry that it coming from our long-term charts, which it was this ones. Look, how beautiful is this? We give 2,650 as a target on gold, which it was the 50% of this movement, and this movement. Is the same movement, one, again, and again, and again. Bottom to the top, retreats of the price, and then when it's breaking up, it's going, again, 50%. This is indicating us that probably the next target is $2,850 per ounce in gold, okay? That's all. I hope you enjoyed the video. And remember, if you are not subscribed to our channel, please click on subscription, click also on the bell to receive notification, and give us a thumb up if you enjoy the video, and leave us a comment if you want to add something. Bye-bye.